What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ASTR for Astra Space Inc. On the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. The first thing we're going to do is just map out obvious areas of support and resistance from the daily perspective, and I would certainly argue here at $11.60 is an obvious level. Prior resistance, 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 and then turned support, and that's exactly where our upper wick was located on today's session. Looking, lower for areas that stand out, we have 1050, I'd say, and then underneath, not a whole lot happening in this slide lower. Obviously, a double bottom way down here towards the lows, around $8.17, give or take. Maybe we'll also map out an area in here around $9.22, simply because we had prior support and then resistance here as well. So I kind of like that area, just being aware of where prior market structure was. So let's flip over to the 30-minute now, see if we got it right, if any of these levels are making sense. And I would argue for the most part, yes. Obviously, we know our floor is down here at 817. Anything underneath that gets pretty nasty here. That's going to be kind of new lows, I would imagine, if we just scrunch this up a bit. New lows for the history of forever here in this particular company. So you don't want to see it go down there. And based on today's action, I'm not entirely convinced that it will, but you should be skeptical, right? Based on the nature of this chart, the fact that we have extreme pumps and then dumps and then extreme pumps and then dumps, you got to be skeptical and you have to treat this simply as a trade. This is not a long-term investment until this chart starts to improve and shows some true signs of strength. So what do we mean by that? Well, forward and upward progress would be marked by a new uptrend, indicating that we would need a new higher high up and over that 1160 mark, and to hold this as a higher low. So we have a major low down here. This could potentially act as a higher low. Now, on any sort of further pullback, we know that we would be looking for a higher low to still form, but it could happen anywhere above this 922 mark in an ideal world. So any pullback into here could be potentially seen as bullish if we start to print any reversal candles. So something like a hammer stick, something like a little doji candle here, basically indicating some indecision. Then yes, be on the lookout for a reversal over those candle highs to potentially start moving higher, and then use this as your higher low. So that would look something like that, HL, from your major low set down here close to that floor at $8.17. So that's the downside case and potential buy point here, only if we start to see some clear signs of reversal based on the candlestick psychology. Scrunching this back up, again, the reason we're sort of thinking that's a critical area is simply because of all the price history we have in there. We would like to see that hold as support. Remember, prior resistance should act as support once broken. So again, here's your prior resistance. If we retest it, should act as support from the top side down. That's 922. Now to the upside, as we start moving higher, if we start moving higher, the first area of resistance to really pay attention to is here at $10.50. We know, again, that it is a critical daily level from in here, and obviously the high of today's session up around $11.60 will be on the table next. But this chart has a lot to do before it really proves to us that it is going to remain bullish going forward into the future. The last thing I'll do is break out our Fibonacci's, as you know, and just see where we kind of sit in terms of healthy pullback here. And we're kind of hovering right around the 50% mark. So ideally, it would have held up around 38.2, which is the first blue line up here, pretty much coinciding with that 1050 mark, but it is at the 50, so not the end of the world, but any candlestick closes underneath that 61.8 down here at $9.64, you need to start raising question marks, red flags. Is this potentially going to roll over and see a 100% retracement, which is more likely than not as we start to close more and more candles underneath that 61.8 from the 30-minute perspective. So if you enjoyed the video, if you learned anything new about these levels, let me know down below in the comments section or by simply leaving the video a thumbs up. Don't forget our main channel is linked down below in the description, and all of that being said, we wish you a green trading week.